Well, a good day to all of you guys. I trust you are all well. I'm well, and welcome to Live Trading Profits. Just going to quickly share my screen and make sure we can get going. Now, what I have here is just a view of the markets that I'm trading. Now, you guys would know that I traded 7 different markets. I've just added the DAX 30, the top 30 companies on the German Stock Exchange. Now, I know some brokers have moved on to DAX 40, but my broker is on DAX 30. So there's a German top 30. So I now have 8. 8th, of course, is Bitcoin. Bitcoin is interesting. I mean, as much as I desperately want to take some trades on Bitcoin, just does not set up the way that I want to set up. But we still have it, and we'll have a look at it. So today, just seems after a bit of action in the morning, we're going to be just hanging around quite a bit, waiting for things to take place. So this is the euro versus the dollar. One of the things that is pretty useful in trying to identify trades is bar counting when you're about to execute the trade, but also pattern counting, something that I came up with, which helps me in identifying trades and optimizing how I trade and minimizing what I miss out on. So here's an example. So where we are at the present moment, this is the euro versus the dollar. Now you guys remember the traditional setup. Okay, that's a high of yesterday. So pretty way up, not even anywhere near the 50% midpoint of yesterday, which immediately tells us a story that although we've had trading range price action, trading range here, an attempt to break beneath the trading range, and the bulls accelerating above this trading range, as well as the high of the day at that time. That was the high of the day, so I left that in so we can see where the breakout has taken place. The goal for the bulls was to get to the measured move here. We barely got to it, but the bulls would have been satisfied if they managed to get that far. Very difficult to trade through all of these breakouts. You could be trading range price action, but where would you have jumped in here? So very tricky to do that. I don't just look at a market and say, well, I'm just going to trade. I have to wait to see my particular setups appear before me, then I execute the trades. So when we broke out above the trading range, that's this trading range here, the open of the day, the purple magenta line, the high of the day, that particular moment, immediately you got to say to yourself, if the bulls are strong, in other words, if we're going to get a bull trend, we want to see follow through by the bulls. That pause, that inside candle tells me a story that the bulls are not as strong as I would have wanted, in order to create a trend for me for the day. So I'm going to have to wait and assume that the trading range price action will carry on. If the trading range price action is going to carry on, in order for me to execute a trade, I need to see a double top or a double bottom. So the beginning of that pattern, the formation of that pattern, there is the one. That high is key for me. If the trading range is going to form, we will create another high here, and the market will turn and give us a double top, or might just go above it a little bit, which is fine, because then it might be forming for us a wedge pattern, 1 up, 2, and 3. So whether we get a double top or another higher high wedge pattern, I am looking for the second touch of an evolving trading range. If you just look to the left here, yes, market is turned. We didn't get a double bottom here in order for us to say, well, let's look at taking the trade. This is still a very important low. So you need to just keep it. So in terms of pattern counting, I would put 1 there. Okay, so that low is critical. If a market comes back down here and gives me a double bottom, then I know I have a second touch, and I look for the third touch to trade up. So presently, we are in a trading range. I want to see a second touch here, and then I'll just mark it as number 2. So I do these things in my head, but I find it useful when I'm talking to guys and discussing trades to mark that on our charts. Okay, so that's going to be there. Now, so that's euro versus dollar. Got to wait to see if we get a double top trading range and trade back. Forget the trading range, we got to trade back. I mean, there's very huge opportunities here. If we do get the trading range, I mean, 50 pips on the euro, you might get a 20 pip stop. Might be able to take that trade, maybe add in later on after the first one's a break even. So good opportunities. Just keep a watch on it if you are going to be around. We'll come back a little bit later on. Let's just keep going around the charts that we have. Nikkei 225. So all of this move that you're seeing here, this is happening at the open, right, of the London open. So whenever you are trading into the open, there's a few things that you need to be looking out for, either a trend to continue, a trend that you'd have seen from the Asian session talking about this particular open, or if we have trading range price action, you got to be expecting that the trading range will carry on, but you need to be looking for reversals to trade. So coming into the market for me, I wasn't in any of this. In any case, if you had been in here and tried to find ways to trade, pretty difficult because you didn't get a clean enough reversal. So there's a market closing down here and immediately gapping up. Test of low of yesterday, inside the candle. If at all you want to take that trade, you have to put a stop up here at the last technical level. That's probably where you'd put that's the only place you put a stop. You could put it anywhere in here, but chances are you probably get stopped out a lot more often. Then you get acceleration, you'd have to expect to get to a measured move. So yeah, break beneath that trading range. Okay, that's why the market turned here and created a measured move. So if you had jumped into that trade, that's where you'd have been taking your profits if you had been up and about and looking this particular chart. Now, if you look at what's happened from this double bottom here, all we've had is trading range price action, two-sided price action, up, down, higher highs, higher lows. Yes, bull trend, pretty tight bull channel, but a trading range being created. Now, I was having a look at this just at the open of this particular session. Trying to find ways to get in, and the objective of that would have been that double top and try and find a lower high, but we didn't get that. So we didn't get any decent enough evidence of bears having taken over the market. I mean, if you look at it, just try and join those lows. Okay, this is the candle that broke beneath it. Even if you looked at that low and just looked at and considered all these tails as outliers, market bouncing off trading range, off the 20, that light blue line. If you've done that, still your breakout into the low, into a new bear pattern would have been this candle. Now, this candle does not allow you to jump in because already you're coming into a level of support. So we don't do that. But if we had a close beneath here, which you can get, and then a reversal up, and you had your third push, that would have been just enough way to get into the trading range. So with that having taken place, and just even watch that, and you're not in it, what you do, you just leave it. It's not, I'm not trading sell the close in a trading range. The only time I would consider, if I see a strong breakout and I don't want to wait for a pullback, the only time I would just sell the close is if we are in a bear trend or we're breaking out into a bear trend. So this kind of price action was to take place down here, bears breakout, follow through, and start getting that, happy to jump in, but not in the middle of a trading range. Okay, in the middle of a trading range, you wait for pullbacks. So every time you see a breakout, as I say, look at where it's breaking out. Maybe you could say it's breaking out there. That's what I looked at this candle. The actual breakout point is right there. And the end of the breakout is here. So whenever I see a huge bear breakout, a huge bull breakout, a gap down, gap up, I consider all of them as breakouts. The first thing you always have to do is just slot in your measured move. I mean, your 50% pullback. There it is. And if the bears at this stage have just pulled back, okay, which would mean the bulls are trying to reverse the market. Some of the bears are taking profits. If the market had pulled back and given us a test of that, a high test of that, a decent enough reversal candle, there I was prepared to go short with the stop in here. And if that had happened, I would have thought, okay, measured move, how far do the bears want to take the market? The measured move would have been down here. But as it turned out, we did not get that. Instead, we had this bear spike, wedge bottom, an attempt by the bulls to reverse. The bulls are strong enough after this strong bear price action to put a bull candle completely above the 10 moving average, which we use to indicate the strength of a trade. Okay. Not close enough. Plus also, remember what we're looking for is our first pullback. We want to see the market going up, up, up without breaking any of the lows, getting to give us a test, reversing, then we trade. By this time, another trading range is formed here. So you don't want to be jumping in to a trading range without the clear pattern. So we wait. Okay. So I had this, I still have this as a potential low. We're right in the middle of a trading range above that point. But I'm not jumping into any shorts here. I don't want to jump, even if the market accelerates down. If I'm going to trade a trading range, I have to wait for the market to come back. If I'm selling into this zone, that's the only place where I want to be selling. Right now, we are in the middle of the trading range. So I'm not going to jump in at all. This measured move here, I was just at that point after the pullback and the double top here, I thought, well, this is possibly the last pullback before we get down here. The measured move of that was to get here. But we didn't get there at that point. Market went sideways. So at this present moment in time, as far as Nikkei 225 is concerned, trading range price action is what I'm seeing, which means I gotta wait for the market to get down here. And if we get down here, one of two things. Are the bears going to, I like a little bit of perfection every now and then. Okay, are the bears going to break beneath this? Strong, if we got this kind of price action, breaking beneath here, fantastic. Just wait for a pullback and jump into it. But as it stands right now, looking at it, I'm thinking trading range. We came down, went up, we came down, possibly a bounce here, higher probability of a bounce here, in which case that would be my first touch, that becomes the second touch. So what I will do now, okay, so that's going to become my key low, not that one. I should have just pulled it down. bit of a trading range price action there. The low of this wedge pattern, 1, 2, 3, and the 10 and that lower high. If we break beneath this, even if it has two-sided price action, of course, the target is there. And that target is our current low of the day. If the market gets there and bounces off, then I will insert my 2 there. Second touch, with a flip through around charts. If I just come back and I see 1, 2, I can quickly move on and say I'm just waiting for a higher low or a lower high. When you actually get to trying to take the higher low or the lower low trend reversal, then I look at the individual candles, how they are forming before I execute. Bitcoin, my friend, Bitcoin going nowhere slowly. Okay, so I'm not going to waste time on that. Just bouncing off the low of yesterday. If we come back, create a double top somewhere up here, then I can start to consider it. But right now, this huge bearish price action reversal, almost in the middle of it, best ways. UK 100. So at some point while we're here, okay, high of the day, present high of the day, double top. I thought, okay, so that's my first top. So that's pretty good for the bears that they've stopped the bulls, they haven't followed through to break above the high of yesterday. So I was waiting to get another touch here. Okay, then that becomes 1, that becomes 2, then just look for lower high. We then have acceleration straight back into the middle of the trading range. Just gotta get up, get some coffee, and wait. So this huge bear move was really just to test the low of the day, to test the 50% midpoint of yesterday's range, and also this low from the end of the session last night, the US session. So we gotta wait. It's a wedge pattern 1, 2, 3, which means the bears tried 3 times, 1, 2, 3, to break beneath this, and they failed. So the bulls are strong. So once again, waiting, trading range price action. What am I waiting for? What I'm waiting for is to see if we will get back here, get a bit of a double bottom. And then if we do that, at that double bottom, I'm gonna look to go long. Now, bear in mind, if what we are getting is trading range price action for the day, if that's what we are getting, then we have to know that we're in a trading range, market will go up and the market will come down. So won't surprise us if it bounces off here, we get an entry and we trade it all the way to that trading range. All of this could happen before the US session. And when we get to the top here, get our double top low high, we can trade it back again. So trading range price action is pretty common. All you need to do is wait patiently. So obviously just put, mark 1 here. When the market gets up here, put 2. Now I use, try and use green when I'm down here because I'm gonna buy. Red when I'm up here, I'm gonna sell. So this is good news because we're getting a relatively clear trading range being formed. All that is required of us is to be patient. So when it comes, we must take the trades because at some point, take a trade down here and you're able to exit somewhere up here and it bounces and you sell from there. At some point, there might be a breakout. You may have gone to sleep or you may have gone to work. It might happen in the US session, but that's perfectly fine as long as we are anticipating it. New kid on the block, DAX 30, German 30. Really got some fantastic moves I've already seen. Took some trades yesterday, which were fantastic. Now, when I love to trade the open, clear open. Okay, so when I get up in the morning, I get up early. I'm in the market 3:15 a.m. my time, so that I can be in when the Hang Seng 50 opens. So today, and we'll look at it, we had a huge gap down because of the holiday yesterday. Well, not because that's the primary cause, because the market is trading everywhere else, right? But when the exchange actually opens, they have to factor in all of that work that's been happening. So huge gap down. But to get crystal clear patterns at the open, that Hang Seng 50 open, if you can get to it, that really for me is a beauty in terms of clarity of patterns that we look for at the open. Spent months and months analyzing another chart to add in because of my disappointment with Bitcoin. And Bitcoin has been on the chart for a while now, and look at it every day, and I'm not getting crystal clear setups. So I leave it on, but I want to add something else because I want to, on markets that move. And this German 30, just for the few days that I've had it on, it's really excellent. And when you time it at the open of the German Stock Exchange and then the London Stock Exchange, you get these beautiful moves. So at a point in time when the market opened, let me do this so I can just talk us through that. Okay, so here's the price action at the open. Magenta line, purple line, high of the day, open of the day. Bears in control right from the open. But when they go to the low of yesterday, did not have follow through, pull back. So this double bottom, not a surprise, but the bear still controlled the first hour or so of the market. High of the day, open of the day. So as the market came up here, and I was actively looking at it and say, okay, fantastic, market has turned here. So I was here at this particular point. So just bear that in mind so I can open this up for us to have a look at it. I thought, well, that's one. Okay. Now, let me see if I'm going to get a second touch, a lower low, and I didn't get that. Instead, we had a breakout, a couple of bull trend bars, tails on top are still good for the for the bulls at this particular point. Then we have this acceleration down 3 candles by the bears and an outside candle. Okay, we don't trade beneath an outside candle. So even though that was my number 2, and I saw that, I just said, okay, fantastic outside candle, because an outside candle is a trading range. Market went down, market went up, and came back. So you gotta wait for the market to break out of that. We then have this bull reversal candle, not a surprise. If the bulls were strong, they're looking at a strong close and they failed. No surprises here. So still means the bears are in control, right? At the double top, we have a wedge pattern created, an attempt to go up, failed. Number 2, to go up, failed. Number 3, failed. Okay, so the bulls have failed 3 times to break above that price. And I was like, this is it, let's get going. All I need to see is a lower high. Lo and behold, we get a bull candle. Don't want to sell beneath a bull candle. And I was hoping to get some kind of form, which happened more often than not, so I'm not disappointed. It's one of those times which this didn't happen. Then we have this bear acceleration. Disappointed? Yes, because I couldn't jump into a trade. But at that particular point, we're back at this level of resistance and that level of resistance, as well as the low of yesterday. So I had to let it go and unfortunately just watched. 50% pullback test of yesterday. My thought was, well, okay, the bears were strong enough to put break beneath yesterday. There's still all this price action on the left, and they broke beneath that, follow through. So let's see if we're going to get a decent enough pullback, and then we can sell this particular market, hoping for a measured move down. But instead, we did not get that. Spike channel, whenever you see a spike at a channel, that's most likely the end of a move. What I was hoping for is spike, pull back, and then a measured move down. So what do? We wait. So some just enough places for the bears to come back and test for us. Many years ago, when I decided to trade the 5-minute time frame, I kind of went gradually down, 15-minute. I hung around the 15-minute for a long time. Then I went to the 5-minute, and I only traded one particular chart for a long time. Eventually, I realized, hang on, when I become crystal clear in my own strategies, then everything absolutely slows down. And it really slows down beautifully. So don't be threatened by the 5-minute chart. If you have your strategies clear, it will be super slow. So as we have it, we didn't get into there, but now again, 3 pushes down, an attempt by the bears to break beneath this price. They failed. Just like we had up here, 3 pushes up and then they failed. So at the present moment in time, I am waiting to see if the bulls are strong enough to give us a candle above the moving average completely. So far, they failed, which means the bears, even though we haven't trading range price action all the way down, the bears are still in control until the bulls can put a bull candle right above the moving average. And if they can do that and come back and give us a double top, I'll have my number 2, then I just wait for a higher low. And if this trading range sets up nicely, I'm going to trade it. But of course, with caution, we'll return here. If we do, and I'm in a trade, I've got to make sure that, at that point, the trade I've taken down here, don't take a trade up here, is at break even. So if the market turns, I come out break even. Okay, if the bulls are strong, they will accelerate above that, and we aim to get there. And if we do get there, we'll look for the double top, and we just enjoy this trading range there until it decides to break out one way or the other. Trading ranges are beautiful because you can trade them, especially if they are broad trading ranges where there's enough price difference for you to make money. Tight trading ranges, just avoid, just stand back, grab some coffee and wait. Okay, so everything on my watch list, happiness. When this was taking place, so I've got about 6 distinct strategies that I trade. When this was taking place, my mind was thinking, okay, maybe we didn't get an opportunity, but that's fantastic. Maybe we are breaking out into a trend, and if we break out into a trend, then I kick into trend pullbacks off the 10 EMA, sweet, as easy as they come. But that didn't happen. Now we are in a trading range, end of the move, spike and channel, and I'm thinking, okay, back to a trading range. Okay, so your mind's got to continually juggle around the strategy that you have. On that point, Wednesdays at the market, just check out on the Actions to Wealth page. Next week, the 2nd Wednesday of every month, you have the opportunity to be in my trading room 8 hours on a Wednesday. And the way it's structured is we trade live the Hang Seng Stock Exchange, Hang Seng 50 as it opens, which would be 9:15 Singapore to 11:15 a.m. Or if you're looking at GMT, I think at an hour for London, it's 1:15 to 3:15. My time is 3:15 to 5:15 a.m. Then thereafter, we come into the open of the European and London session, 3 solid hours. 8 a.m. my time to 11 p.m., which is 2 to 5 p.m. Singapore, and 6 to 8 p.m. GMT. 3 hours there, so 2 hours, 3 hours in the open of the US markets in the afternoon for 2 solid hours. And then we have a money management strategy session, which is just 1 hour. And there we just discuss how every optimist is one thing to trade very well. It's another thing to understand the mathematics behind money management so you can accelerate your wealth extraction from the market. Okay, let's just check. How to join? Hey, Gary, so there is a link, and I'm going to ask Mai if she's got it. She can probably just post it on the chat for us. James created that for us. If it's not ready, I will make sure it's posted on ATW social platforms today and tomorrow. But you just go onto that and it's one-time registration, and you can, okay, Mai doesn't have it. So not okay. I won't pause. I might end up delaying things, but it will be available by end of today. I'm going to post it on the ATW social media chats, on Telegram, etc., so that you can see it. One-time registration and sit in. It's probably the best learning that you can go through. I'm actually trading, probably not talking as much, but trading. I think it's 8 hours publicly available, freely available to everyone. And then if you enjoy and you are learning, you know, the third and fourth Wednesdays are a different paid up subscription. But come to the second Wednesday and experience it and see what it's like. What I get, I look forward to seeing you there, mate. Okay, S&P 500. Okay, interesting things happen while we're talking. Same kind of thinking that we had. That was my top. Okay, test of the open of the day. And 6 candles later, that was number 2. And I was like, well, I'm pretty happy with this. Now I just need to see a third, which could be a lower high, a higher high, reversal, whatever. And we didn't get that. Immediately after number 2, within a couple of candles, the market accelerated down. So no opportunity for me to jump into the market, at least according to my strategy. So I had to sit back and wait. 50% pullback, which is also at that particular point, it was the low of the day. Market didn't get back to that. Instead, we had this wedge price action, and followed by that, we had the bulls showing strength, at least a full candle above the 10 EMA, a doji, so not terribly exciting, but still, first time they did that. Now, at that particular point, that's through my 1, and now we now have a 2, but why would that also be a 2? Why would that be interesting in terms of trying to look for a potential bottom? If you look at trading range price action, the low of the wedge, test of the 20 EMA, that's the goal for the bears, and right at that goal for the bears, the market turns. So bears taking profits, bulls standing back and waiting to get there to see if the market can turn. So I'm still, what I'm going to do now, S&P 500, I'm just going to put my number 2 here. Okay, so this wedge low is 1. So this is a lower low trend reversal alert. What does that mean? That means to me, unless the bears are strong and they reassert themselves somewhere within here, the bulls are going to take control of this market, this trading range market. To what extent can the bulls take control of it? The bulls are now able to follow through on these candles here with a proper close above the 20 EMA and then give us a higher low. You can jump into that, but remember, if you jump into that trading range, you're only going as far as that. Okay, if you want to take your profits, you can take your profits there, or if you want to observe, if you break about it, that's what you do. But so far, we have the ingredients of a decent enough major trend reversal. We spoke about this quite a few times last year, and as they appear, I remind you. So trend, spike and channel to the trend, break off a trend line. So you always want to see some form of a trend. Break off a trend line, we did. Moving average gap bar, so a candle that's above the moving average. Then an attempt to resume, which we did, got to this double bottom level here, and then we had the lower low, very weak lower low by the bears. So lower low trend, major trend reversal, alert. It's an alert, just says to me, watch out, it is most likely that market might turn. Okay, it doesn't mean that the bears have lost control, but I'm not looking to short anywhere down here. So what am I looking to do? Because of trading range, I'm looking to buy. And the way I'm going to look to buy is if market comes back, I need to see at some point that close above, another close above the 20 EMA. But then the market comes back, gives me a double bottom somewhere within here, and then look at those candles bar by bar and get a reversal in here and look to see how far we get the acceleration. So everything on my watch list. Gold. Okay, again, interesting. So gold, what's been created so far, trading range here up to this level, which was the low of today, failed breakout above it, and measured move above that is here, which the market is just almost tested the micro double top. So that for me is fantastic. Now I've said that is one. You could say that is two because we're broken above it, trading range. That could be 1, 2, then you want to see a double top. But I've called that one because of these four candles, four strong candles. Whenever I see, when I'm doing my pattern count, whenever I see a strong breakout, I reset the count. I just start again to make sure that I don't miss anything. So that's one. So good micro double top. So that's a double top next to each other, or could have a candle beneath it. That's one. Number two, I'd like to see an attempt to test that or break above that, and then a resurgence by the bears. A couple of strong bear candles, somewhere closing beneath moving average. If we get that, that's number two. Then all I want is a lower high. At the third touch, I am going to trade. Okay, so when you get that third touch, then you got to slow down and now just look at those candles as they're unfolding. You know, am I getting a decent reversal candle inside pattern breakout modes? It will speak to you, and if it does, just take the trade. While we're here, this is critical. Where do you put your stop? Okay, so let's assume everything sets up here. It's always important to decide where you put your stop. One of the best technical areas to place your stop if you're taking one of these trades. These are reversal trades. Okay, you trade in the top of a trading range, open it reverses back in. It is a reversal trade. It's not, you're not in a trend. So with a reversal trade, you don't want a tight stop loss, because if you have a tight stop loss, the chances are you will get stopped out a lot more often. So a measured move is the best place to put your stop, just above the measured move, because your assumption is you get your second touch. But when the bears resume, you might just get one huge candle. Okay, that might stop you out. And then lo and behold, when you turn back to look, is a decent enough reversal candle before you get to the measured move. So if you're taking any of these trades, trading range trades, reversal trades, open to go back, use the measured move. When the market starts to accelerate down, and that's a break even, and you get a pullback, then it's a different kind of stop. It's a tighter stop that you can put in. Okay, Hang Seng 50. So very interesting. Gap down, 50% pullback of the gap down, which is almost the same. It's the same, literally, as 50% of the previous day. You know, so just call it yesterday, the market was closed, but Monday's trading range. So that means this is a strong resistance level. Okay, 50% of the gap down. Now, when you see a gap down, don't be worried about the blanks. All it means it is literally a strong bear candle, because it was selling that took place. Whether the selling, if it was yesterday, had been going up and down and bouncing, who cares? But that gap down indicates strong bearish price action. So at that point, when I saw that, I said, okay, fantastic. Let's see if we get a 50% pullback. Whenever you see a gap down, breakout, news announcement, put the 50% in. There's a high probability of trades setting up at that level, at that first pullback. We didn't get that. So an attempt to accelerate. If we had gotten that, that's where you'd be going. So if you search out for these and you just make it a habit of putting 50% pullback, whether it's a bear gap down or bear breakout or bull, and wait for tests there, the trades will come, and these are very good, easy trades to take. In any case, we've gone sideways. Trading range has been created. So that's my first touch. There's my second touch. And I'm now going to wait, okay, because we are in a trading range. We never got to the 50% pullback. The bears are still hanging quite close to the low of yesterday. So the market is still bearish, but we are in a trading range. So if we get down here, you get a decent enough reversal, it's worthwhile to take it, but you are trading this trading range. That is all you are trading that trading range. And if we do get acceleration, depends how strong the bullish leg is, there is still this level of resistance to contend with. So you got a choice: either take the trade here, if we have a bounce and a reversal, and see if we can get up to there, or alternatively, just wait and see what plays out. Will the market get up here, bounce off, and take a trade here? Will the bulls, the bears accelerate down? Because remember, there's still the objective there. Bears could say, well, going sideways, but we can break beneath this trading range price action. So if you break beneath the trading range, the measured move is objective. So if instead of a bounce here, if you don't get a bounce, and the bears give us 1, 2 strong candles, remember you need the close beneath the moving average, and you need follow through to confirm. So not moving average, close beneath the low. In the follow through candle, if you get that, then you're going to look for a reversal to test. Your objective would be down here. Let's have a quick look and see if anything else set up while we're talking. We're still hanging on euro. We're still holding firm. Again, when I say we're still holding, I'm saying our thinking is still the same, that we're looking for bounces off here and a possible reversal into the trading range. Say hello and buy to Bitcoin at the moment. UK 100, so that's still our one. Middle of a trading range, nothing to do. Wait for price to get up to here or come back down here, and then you see which way the trading range is going. German 30, excellent. So we're coming down to test this level. So that becomes our 2. Got a couple of minutes to go. So market bounce here, that becomes our 2. Then we just gotta wait. If we get a decent enough reversal here, perfect 2. We're gonna wait for a high, low, whatever the case may be. If the bears accelerate down, there is the objective, the key support level. The break beneath this, give us follow through, and we're gonna wait for the pullback. S&P 500. Okay, we just looked at that. Okay, guys, so my little homework is to get you the links for Wednesdays at the market with George, and as much as you can use those 8 hours and let's be in the market together. We still have our 45-minute show. So within that Wednesday, it's really 8 hours and 3/4 of an hour. So this show will carry on. There's another 8 hours, which I hope I will see you at. Thank you, guys. Thank you for your attendance. Just wait patiently for trading range price action. Thank you very much. See you guys next week.